All right, good morning, everybody. It's Tuesday, January 25th, 2022, and we're going to get started here with our pre-market analysis on the S&P 500 futures market. So real quick, yesterday, remember we said, pretty much a bearish market. We were going to be sellers. However, we were seeing the potential for the reversal pattern as we continued to push to pretty much every time we pushed to a new low. There was an argument from the higher time frames, again, from like I think the weekly all the way down to the short time frames. We're showing bullish signals as we pull back. And remember, I said 42.52, and we might have to go back to the higher time frames to look at this. 42.52 was basically the line in the sand for those potential signals to form. So if we broke below this area in the market here, this 42.52 was the swing low over there. That was basically it for those potential bullish signals on those higher time frames. So we did continue to sell off. We came into a lot of our eye levels here, got some pretty good support, like right off 43.61, got an attempt to get the bounce from there, and I told everybody, that might be where we get it, the bullish follow through, but then again, continued selling off into the open, and then let's see here, we came right to 42.62. I think within 1 point, we bounced right in front of it. Again, tried to bounce out. That was another potential area where we could get reversal, and then they continued going. They got through 42.52, so kind of broke right through that level. We said we'd really like to see them, the bulls hold for the potential bullish pattern, and then they pushed even lower. And what's interesting is they came right to 42.12. So the low here was 42.1275. If you were to go back to our pre-market yesterday, I specifically said when I zoomed out, if they continue to sell off and they break through 42.52 and then keep going, the next level down below that is right around 42.12. And we'll go back and take a look at where I got that number from. It's not like I'm a psychic here. I'm just looking at what the charts are telling me. So we'll look at where I got that 42.12 from in a second. And just to kind of finish up yesterday here, as you can see, a huge sell-off until about lunchtime, and then right around lunch, we got that bounce and that really nice reversal, right? So we did try reversing a couple times here, and then got it right around lunch and got a really nice follow-through back up to the top end of that daily range. So that's what brings us here into this morning. As you can see, we're now within yesterday's price action. We're well within the strong area of this current leg right here. So if we just go from the low of yesterday all the way up to the highs we made so far, you can see we're well above the 50% of that leg. Again, the general scheme is if we can stay above 61 to 75% of this leg right here, and the bulls can hold above those areas, the idea is we would come up and break the previous daily high up there at 27.50 and attempt to go ahead and start chugging back up. The question is that what we're going to get this morning? So let's take a look at all our time frames, and then we'll go down and start looking at some good levels as well. So going to jump through the high time frames really quickly, but there have been some new developments after this huge sell-off that I want to quickly talk about. So 3-month chart, don't really have much to say other than the fact that now we do have, remember I said 42.52 was the low of that previous 3-month bar. If we break that, we now have a bearish engulfing bar on the quarterly chart, which is not a great thing. In fact, if you look back here just before the COVID or I guess as the COVID correction was happening, it created a bearish engulfing bar, and then you can see we did get a nice, this is probably an outlier because of what actually was happening in the world at that point. But again, another bearish engulfing bar back from 2018. And then after that, this sell-off back down. So every time we see a bearish engulfing bar on this quarterly chart, we do end up seeing some type of major correction in the market. So the question here is, are we going to see a similar pattern to the last 2 times we saw our bearish engulfing bar on this higher time frame, right? So these 2 times, we've got a pretty hefty correction. In fact, looks like the size of this candle, it was twice the size of this candle to the downside in almost both instances here. So that could bring us all the way down into the 38% retracement of this huge leg from the COVID correction low to the all-time high at 48.08 up there. Again, this is just kind of a zoomed out perspective. Want to just kind of bring it up. And then I said there's some new development since we did sell off. We did not hold 42.52. We've now pushed lower in price from that previous low, and so has RVI. So there's definitely no divergence there anymore. There was a nice divergence from that previous monthly low because we did see this in price in RVI, a lower push in RVI and a higher push in price. But as this continues to sell off here, you can see there is a little bit of a inflection point right there. It's hard to see, probably even on the screen for you guys, but there is slightly a little bit of an inflection point, and then it curves and starts going out this way. It's almost a straight line, so I'm not so sure I want to continue to read into that one there. But regardless of the fact that we've broken the low, so it's basically negated that bullish signal, and we'll see what happens here on this traverse down. Are we going to get some type of reversal pattern on this RVI? So I don't know what it's going to look like. I don't want to theorize too much, but we could eventually get some type of peak and then maybe some type of bullish divergence when we actually start getting the turn. Remember, it doesn't have to be that way. We don't have to have a divergence for one of these time frames to make a move in a specific direction. But typically that's what we see. In fact, again, looking back to when we saw the charts over here back in November, we saw a bearish clue in the market, and then sure enough, we peaked above and failed, right? So this is one of those concepts we've been talking about for a while and was part of our intraday reversal, is seeing something come up, seeing a high, seeing a bearish pattern, and then seeing the market come back up and break that high, kind of peak above it, and then fail. So we had it in the cards back here in November. Now, I just wanted to kind of spend time on the higher time frames because now, as you can see, we push lower in price, and so has RVI. So we don't have that same pattern anymore that we were seeing just probably before the sell-off yesterday. Same thing on the weekly, right? We've pushed lower in price compared to that same swing low at 42.52, and the RVI is now also lower, so there's no divergence there. Now, the thing with divergence is it can get tricky because now we have all these other major swing lows back here that we could compare to over there, and all of them are much higher than where it is right now. So it's going to start to get tricky with trying to read this type of signal in this kind of situation right now to pinpoint the low, because we could basically continue to sell off and there would technically be an argument all the way back to basically the swing low down over here at 26.95. If we go all the way back to 26.95, there's something major going on in the world. So it's not going to necessarily help us now that we start selling off from here. Like I said, we could pretty much look at almost every swing low here and make some type of potential bullish argument. So I don't know if this weekly is really going to help us in the pinpoint, but what I'd like to see here is if we start to reverse, maybe again we'll get some type of local bullish divergence pattern or something where the RVI is a little higher here, but price kind of bounces, pushes a little bit lower, and then we have a nice divergence there, local divergence for the turn. Just keep in mind that's just an idea. It doesn't have to happen, but if we see some type of pattern like that, that's typically the kind of reaction we see in the market. So weekly, monthly, daily, no longer showing that potential bullish signal. And again, you can see on the daily here, we were drawing it because it was still higher than the low at 42.52 yesterday morning. But after that sell-off, we do not see it. So let's get rid of those. Now, from the higher time frames here, we've kind of swept through these. We don't really need to talk about them. The daily, though, look at this gigantic wick here. This huge recovery from the lows of yesterday back up to the highs of the day. So again, it's somewhat of a reversal bar, right? Like here, we said back at the beginning of January, looked like we had this huge recovery from this pullback. We could potentially go up and start pushing higher. and push to the all-time highs. Of course, we had to get through the swing lows there around 47.47, and sure enough, it came right up just in front of 47, and then we got the failure. So right now, again, we have a potential bullish reversal bar, in my opinion, that looks like a huge recovery from that low. So again, if we don't break the low of that candle, what we'd like to see is a nice push up and a break of the high of yesterday to get that reversal pattern going. So that's it for these higher time frames. Let's now jump down into the intraday time frames and see where we are right now. In fact, we bounced pretty much directly off of 50% of the previous day here and got a pretty good follow through, more than 10, maybe even 20 points of a bounce right off of that level. And again, we're stuck within the previous daily range here. So we're kind of in one of those days where we have to see what's going to happen here. If we get some good bullish follow through and they don't break 50% of the previous day, and they can kind of, chug up here and get through the previous daily high, then we might start to be getting, that potential reversal that we've been anticipating here as things kind of sold off. Now, remember the what's the word for it? The stipulation for the turn yesterday was staying above 42.52 because we were comparing that previous swing low. Just because we break below 42.52 doesn't mean we're not going to reverse below there. It's just that the signals we were seeing on, again, the weekly, monthly, and daily were telling us ideally we would stay above that low in order for that pattern to hold, but it didn't, right? So we broke lower. Again, doesn't mean just because we're below that structure at 42.52 that, it's all over with. They can continue to pull back deeper and eventually bounce. Now, this brings in 42.12. Why did I bring up 42.12 yesterday? So we were looking at the charts, and I don't remember what time frame. I believe it was actually up on the daily or something right here. And I mentioned to you guys, if we do end up breaking through 42.52, it opens up a whole bunch to the downside. The first area probably being right around 42.12. Now, if you just look at my crosshairs here, and you see 42.52, let's go up to 42.52 here on the chart. So those are these swing lows right here. So what did I do? I just kind of went back a little bit further down and saw this last major swing high back here. So we've got the 52 area, and then if I move my cursor a little bit lower, there is a swing high right there at 42, let me get the high, 42.4150, but I was looking at this right here, this swing high coming right across there. And I said, to me, it looks like that might be one of the first potential areas we could pull back into, find support right off of that high back there, and get a bounce. And sure enough, that's exactly where the market bounced from. In fact, the swing high that I was looking at was at 42.12 even, and the market bounced at 42.1275. So I was off by 3 ticks there. And again, this is why I tell you a lot of times front run your stuff right in front of the level, because sometimes they do tease you and come right in front of it and bounce out. So again, that's where I got 42.12 yesterday, and it's just my luck that, like, once again my levels held within a few ticks. So, well, not my levels, the market's levels, right? So if we do continue to sell off here, maybe what I should do here is look at what else do we have below us. And I mean, if this breaks, we definitely have something right around this 41.50 to 55 area. Again, I have to go back and really scrutinize those highs over there, but somewhere around 41, let's say 50 to 41.60 down here, to me would make sense as the next potential area for some type of bounce. Again, right around there, 51, 55, right in there, and then a little bit deeper into the 41.10 area. And I'm just looking at these structures over here. So we have these swing highs right around here that are also pretty good support over in this area, and that's that 41.50, 41.60, and then a little bit deeper right into this area where we launched out of, right around 41.10. So those are some levels below us if they do end up deciding to sell off here this morning. And then let's take a look. So we looked at the 4-hour. We said we were in an intraday situation right now. We're holding 50% of the previous day. So maybe a little bit of a bullish clue so far. Of course, remember, breaking below it, that's going to change things. But for now, we're holding above it. We've got a decent bullish divergence from that overnight low here on our 60-minute chart. So that's pretty good. What else can I say here? So if I do see bullish divergence from this low over here, which I believe is our overnight low, if I see a bullish divergence on the 60, the 30, the 10, and the 3, that's telling me there is somewhat of a potential here. And let's see if I can get this on here for the market to actually start pushing out this way, right? Just a potential. So let's take a look and see on our intermediate time frames if we do have that kind of pattern from there. So let me pull up the 30. Unfortunately not. So 30 doesn't really have a nice, beautiful bullish divergence from that low. I was hoping to see something like that. That would give me more faith for the bullish breakout. And let me see the 10-minute. So let's zoom up to this morning and look at the 10. Yeah, well, the 10-minute does have a local bullish divergence, but that 30-minute, not quite agreeing with it. So I'm not sure what that means here. I see a 60-minute, I see a 10-minute. I see kind of a 3-minute bullish divergence looking at this major swing low back there to here. So there are some pretty good arguments for the bulls from the overnight low. So let's see if we do get kind of the beginnings of a bullish rally out of that level. So let's just wrap things up here for everybody watching out there on YouTube. We are within our previous daily range. We're holding 50% of the previous day with a pretty good confluence of bullish signals on a number of time frames. So the potential here is for this bullish push. Now there are some levels we have above us. We have kind of the retracement from the highs of yesterday and the overnight session down to the lows we made this morning. And 38% brings us right to our eye level and our prediction point right there at just about 43.50, 43.51. And then we have 50% of the 4-hour candle we look at up there at 43.56. And unfortunately, it's kind of tight in here. We also have our major eye level at 61. So there's a couple levels right in there that we'd like to see the market rip through for the bullish case to really give us any type of confidence. Remember, pushing up in these levels can get rejection and a continued sell-off. That's a possibility. And then again, if we get through 61, which is just about 50% of the whole push down, we then have the CP and the 61.8 up here at 73. And then this 10-minute swing low, which you guys know I love, is 43.83 So very possible that we have something right across that 83 area as a potential resistance point. And we'll make this guy dotted. So watch out for that if it comes up. It's also right where we rejected in the overnight session, interestingly enough, right off that swing low. So maybe that was already used now. I didn't really see that until after I drew the line. It looks like it was used already, so that might not be as strong, but you never know. The market comes into these levels and reacts, right? So we'll see if that's a possibility. If they get through there, then we have our major eye level and prediction point at 98. And then the highs of yesterday, or the highs of the end of yesterday, are right around 44.15. So these are all levels above us that we need to see the bulls chug through in order for me to really have faith that we're going to have some continuation from this little intraday reversal from yesterday. So I'll leave it at that for now. It's actually one last thing I need to mention, and that is the retracement of this leg here. Again, just about 50% of the leg. 61.8 brings us right into the prediction point at 42.86 here. And then a little bit deeper, we have 42.62, essentially right where our major rip started back here around 11:50 Pacific yesterday for the end of the day. So these are some key levels to watch if they break lower. And then we talked about if they continue to sell off, there were some other levels not too far down below us to keep in mind. So I'll leave it at that for those watching out on the internet, and we're going to jump down to the short time frames and see if we can get some trades coming into the open.